Hi, everybody. Welcome to this week's Middle Class Investor. This is Seth Martin, your host. I want to thank everybody for coming in today and watching the YouTube video. Today is July 11th, Saturday, and I had an interesting week in the market. Lot going on, lot to talk about. Probably not even enough to talk about today. What I've got on the screen here is the 10-year Treasury yield. And, I keep talking about this market because I think it's super, super important. A lot of older people have bonds and are in high yield and various things like that. And this is just a bonds are widely owned in 401ks, IRAs, things like that. So you can see here that yields kind of bottomed out. I drew this trend line, I don't know, last week or the week before, and you can see we went below it, but then reversed and took off back to the upside. So what that means is bonds went higher and then turned around and finished the week lower, pretty significantly lower. So it looks like this pullback that we've had in bonds or in yields looks like it's about over. And I've been saying this for a while, but you need to be out of bonds. It's your money. It's not a recommendation to buy or sell. It's just, I don't know, it's not a recommendation. We can't make recommendations because I'm not a licensed broker or dealer. So it's not a recommendation, but I'm just telling you there's a lot of risk in bonds. And you can do what you want with your own money. That's why it's your money. Let's look at the S&P 500. On the surface, it looks like there's not much happening in this market. But that's only because the price range has gotten so narrow. Let me take that off, redo that. That's because over the last 10 weeks or so, the price range has gotten so narrow. So now that we've moved down out of that range, it looks like, no big deal. But I'm going to show you, we're going to look at some sectors. If you look at the average stock in the market, the average stock is down considerably from here. And we'll look at financials. Financials is a big one because the market really can't go higher when financials are going sideways or down. And so that's always a good one to look at. And then I'm going to show you some leadership, but the leadership is very, very thin in the market. And most of you know that I've been calling for a new high here for several weeks. I don't know, many weeks now. And last week was probably the first week I didn't think maybe we would get a new high. I didn't say it, but this week really kind of confirms it for me. I don't think we're going to get a new high. I think I've kind of turned my thinking to, instead of a new high up in this area, I think it's more likely that we're going to come to just somewhere up underneath this line right here. So you can see that I've drawn the wedge. The wedge line is here and then here. So you can see the market did bottom real nicely. Came down to some pretty good support on some moving averages and turned around and went the other way. But I think we're at this point we're likely to get either just under this line or maybe a little above it, and then the market sell off pretty hard. So, and the reason I say that, I'm not just looking at this chart, although this chart is telling me that. But if you go scan the S&P 500, you go scan all the charts in the S&P 500, about 60 to 70% of them are flat, or let's say are down, okay? Down not just a little bit like this, but down pretty significantly. And then maybe 20% are flat, and then maybe 10 are up. And I'm going to show you some of the up ones today. We're going to go through a few of those just so you'll know where the strength is in the market, because if the market does come down, maybe sells off and bounces and starts wanting to go higher, where we're going to want to, if you're a trader or you're an investor and you're looking for good stocks to buy, what you want to do is you want to look where there's strength in the market. So we'll be doing that. Let's look at the euro US dollar. A lot of stuff happening in the euro. We've been talking about the euro being in the news a lot, and it continues to be in the news a lot. There's a lot of back and forth. Are the Greeks going to get kicked out of the euro? Are they going to pay back this debt? Is anybody going to loan them money? I mean, there's all these questions. And I think what we're going to probably see here over the next couple of weeks is we'll probably see the euro travel to just a slightly higher high than where we are right now. So take out this high, but then there's a resistance area. We've been calling it a decision point based on Steve Griffiths with MT Predictor. That's what he calls it. So I kind of like that because it tells you that it's a place where you need to make a decision, or where the market might make a decision. So I think you'll see the euro bounce up into this area here, and then likely roll over and make its way down to some lower lows down in this area here, below this blue line. So, of course, that's a prediction, and sometimes predictions are wrong. So, kind of like that commercial, take it with a grain of salt. Let's see. Let's look at Germany. Germany broke the trend line, which was, we kind of talked about it last week that Germany was looking weaker, but it finally broke the trend line, but got right back above it. So, technically the trend line has been broken, but anytime you see this, sometimes it means not really. So we could still see Germany go higher, but certainly it's under a lot of pressure here. There's a lot of chop here, and remember, this was a lower low than back here. So, it's hard for me to tell whether Germany is leading our market or whether it's going to go make a higher high and our market's going to lead down. But at this point, I'm kind of leaning towards Germany is going to lead the market down because it's already at a lower high. I mean, this high back here was around 31.5, and now this high only went to about 30.5. So, given that, so you can see it here in this view, these old highs here, and then it sold off pretty hard, and then it looks really tired on the way up here, and we could get just a slightly higher high than this high, but it's looking to me now that this high probably is not going to get taken out, and this is going to roll over. So again, another prediction. I'm just looking at this like if I were going to buy it. If I were going to buy this right here, I would get real, not nervous, that's not the right word, but I would want to see what it does when it gets to this 30.5 area and watch it very closely, and may pull the trigger quickly to preserve profits. Let's go back. I usually look at volatility after I look at the S&P 500, and I didn't do that, so let's go back to volatility. You can see that I drew this line, I don't know, some time ago, and then I drew this blue line because this started to bounce through the green line. But we were talking about, first thing that needs to happen is volatility needs to break out of this downward channel, this downward trend line here, which it did and closed 2 weeks in a row. But then also it's poked its head above our little green trend line, which is also bullish, if you will, for volatility. So I think you could see volatility pull back here, maybe into this area, right around here, and then probably start rallying to the upside. So what does that mean when volatility starts rallying to the upside? That means the market's selling off. So we're at super critical points, though, and it could go either way. The only thing that's really leaning me towards down is, there's a lot of things leaning me towards down, but the only real evidence that you see in the market that's leading me towards down is really the thinness of stocks that are going up. There's just not many stocks in the market that are going up. Let's see, let's go back to the countries. Japan, pull back. I still think Japan could hit this decision area that we have on the chart. This pullback, it looks somewhat corrective, and it did stop in an area. You can see here we have the last pullback. If you had a DP off of this, it did pull back to an area of support and then rally. So if next week we get a bar that looks like, let's say this, in other words, it closes above this high, then I think for sure you'll see Japan move into this area here. Now, anytime the market moves into these decision point areas, it usually then reverses. Now, it doesn't mean it reverses and goes, completely the other way, but it will reverse and come back to some sort of support. So that's why these are good targets for you if you're trading or investing, because if you got in here and it rallied up to here, you wouldn't want to hold it all the way back to, let's say here. Let's say it pulls all the way back to there before it stops going down and then resumes its uptrend. You wouldn't want to, that just wouldn't make any sense to buy it right here, let it ride all the way up here to a gainer, and then have it turn into a loser. That makes no sense. So that's kind of the danger of getting into these trades so long in the trend. There's nothing wrong with getting in long at the longer part of the trend as long as you control your risk. In fact, all this is about controlling risk. It's not about getting lucky and picking the right stocks. You can pick any stock and make money on it, but you've got to control your risk. Let's see here. You could look at the Russell 2000. Kind of looks like the S&P. Broke out, but then immediately pulled back. That's not usually very positive. When the market rolls over, it usually gives you several chances to step to the sidelines. It's not like it goes up to a peak and then immediately rolls over and sells off 3,000 points. That rarely happens. So usually the market will give you lots of chances to make some good decisions, and that's why you need to look at some of these other things behind the scenes to see what the market is doing, not just the indexes. Although the indexes, that's what everybody looks at, and that's what your 401ks and your IRAs are, the people that trade your money, that's what they're measured against, and so most of the stocks follow those indexes. But the indexes, are backed up by stocks, and when a huge number of the stocks are weak in the market, you're not going to see a lot of movement upward in the indexes. Okay, so what we're looking at now is the dollar, and we were talking about the dollar a while back, how it pulled back, and after this really big run, it had a huge run. Had a huge run up into these highs here. This is just a monster move in the dollar. But after you have a monster move, you have a pullback, which we got. You can kind of see it here. Kind of down, up, down. This is pretty typical. You get a down, up, down. And then it looks like the market is kind of meandering its way higher. Now, you could see, let's zoom in here a little bit. You could see that right in here we didn't know whether or not it was going to. It looked like it could have pulled back and made a lower low, but it didn't. So I would say the dollar is probably at this point done going down, because what you have here is you've got where the market pulled back to a low, You had a pretty decent rally, and then it pulled back to a higher low, and then we've had another decent rally. So I would say you can enter the dollar here and trade up to the DP pretty easy. What is that? That's five or 6 points, let's say, on the dollar from here. I think that's a pretty safe trade. Your risk would be, stop below this low here at 93.20. Let's look at gold. I know there's a lot of people really confused about gold. They're looking at gold and they're going, why isn't gold going higher? All this craziness. Gold should be going higher. It should be doing this. It should be doing that. Well, I think it's pretty close to probably going higher here. I think again, it's very similar to the dollar. You had a really strong pullback, and we've talked about this pullback before. Where not one of these subsequent weeks closed above the previous week. And if you recall, I entered a trade right here. Of course, it went well for a couple of weeks, and then it kind of got whacked here, and I think I sold right in here somewhere. So I didn't even make it to the highs because this action right in here looked pretty ominous. So anyway, you see now you see a higher low right here. Okay, it ran up and it's pulled back to a higher low even still. And this, if you get a close next week above this week's high, and maybe we don't even wait for the close, right? Maybe you can once it breaks out above this area right here, you could be a buyer. But certainly if it closes, so if next week looks like this, I think you're going to see gold go quite a bit higher, probably up into that 1,400 area, maybe even 1,500. So for you guys out there that are looking at gold and want to buy it, I mean, you got a pretty good trade right here, and you could put a stop below this low right here. But I think gold's at least going to this 1320 area, and potentially a little bit higher than that. Maybe not 1400, but 1320 to 1350, let's say. Crude oil. Crude oil is rolled back over and has gone down. We were looking for it to go to the and I'll pull the chart up. Sorry, I'm hitting the microphone. I'll stop doing that. I'll pull the chart up on NinjaTrader here in a second, but we were looking for crude oil to move kind of into an area really a little higher, like what I was calling a wave 4 area up in this area. And it stopped short. Now that doesn't mean it won't go to there. It could still go there, but it had to pull back first. And so this looks like a pretty good. I mean, we could see a pretty decent rally in oil in the next over the next several weeks. So especially again, if we get next week looks like this, then I would say oil is probably likely moving into this 70 area. So keep an eye out for that. So again, we've got a low here, but it's higher than this low. And if we get a close that looks like this next week, oil, you could see a pretty good move in oil, maybe $15, maybe even $20 move. So keep an eye out for that if you're trading oil, if you like, or if you're looking to invest in oil or in oil stocks. Oil stocks also presumably would go up with oil, so keep an eye out for that. All right, let's look at NinjaTrader real quick. We'll go ahead and look at oil since we were just looking at it. But let me look at the continuous. So here's what I was talking about. You can see we've got this box up here that we're calling resistance. There's a lot of in there, but and you can see I've even got a line on here that's looking for oil to move up into the 75 area. And again, like I said, if we get a close that looks like this next week above this high, okay, above this high right here, then I would look for oil to move into the $70 to $75 area. Well, let's see what else we have in here. We've got bonds. So we were talking about yields earlier, and you can see bonds ran up here. and quickly got whacked, and looked like they want to make, a low down here below this low. And look, if you don't sell bonds right away, I mean, we are likely to get a bounce up into this area, and then a pretty good down move. But this is a 30-year bond chart. I don't know if we're going to get that in the 10-year. So just bonds requires a lot of caution right now. That's I know I keep harping on it, but I just want to make sure that everybody is clear on that, because it could be potentially a big loser in one's account. All right, here's the, of course that's a 3-minute. Let's get it off that. Let's put it on a daily. Look at the ES on a daily. And you can see it's very, very messy. Whoops. The wrong thing there. Let me spread this out a little bit and then zoom in on it. And just don't pay attention to the letters and stuff that I have up here. But I'm looking for the ES to pull back all the way up into this area where these two black lines are. And we'll go back and look at the S&P 500. But I can tell you right now, this basically coincides with the underneath side of, or just slightly above, that trend line on the wedge. And the reason I'm looking at this area is if you look very carefully, right here where I've got this yellow circle, there's a gap here. There's a gap between this bar and this bar. And gaps they tend to be like a magnet for price action. So it's perfectly reasonable. Let me go to a smaller time frame. Let me go to a 60-minute chart, and you'll see the gap better. So you can see this gap right here. You can see this gap. There's a gap between here and here. And so I'm expecting it to move either, to the bottom line or in between these lines, or even maybe slightly above it. But me personally, I'm going to get short if I get the right signal in this area right here, which is basically the gap. It's the top of the gap between this bar here and this bar here. Okay? And you can see we're not too far from there now. I mean, I think you can see we got a TS3 sell signal here in MT Predictor. So likely what you're going to see next week is you're going to see the market pull back, something like that. Keep in mind, this is a 60-minute chart, so each one of these bars now is 60 minutes. So you'll see it pull back like that. And then I think what you'll see is you'll see the market run up into this gap area. And for me personally, not you, but I'm going to be taking a short position right here because this could likely be a pretty good move, and I want to be able to capture that. And I'll have my stop just above here, just in this area here. So don't worry about me. Everybody needs to worry about their own money, We used to have a customer, and there's a couple of you that listen to this that might remember this, but we used to have this guy, and his saying was, "You keep your hands in your pockets, and I'll keep my hands in mine." We used to laugh about that. Let's go back and look at some of these stronger areas in the market that I told you we would look at real quick. And I'm going to look at them on a daily chart, if you don't mind. We'll look at them on a 1-year daily. And, we were talking about the transports. The transports got whacked really hard over the last 10 weeks or so. But during that time, there's been some that kind of just stayed flat, like Alaska Air. And you can see Alaska Air here kind of stayed, just kind of chopped around all this time that the transports have been going down. And then all of a sudden you see this price action moving out here. Now Alaska Air's got earnings coming up, so you got to keep that in mind. Because depending on, again, let's say you got in here, let's say you took the breakout next week, and you got in right there, okay, and then you're holding and it's going great, and then they have earnings, and you get a gap down, and so after earnings, you get a candle that looks like this. Well, you're underwater now because you entered here, right, and it opened here and ran down, so now you're underwater. So you can hold over earnings if you've been in a stock for a long time. You can get in. A lot of times, a good place to get in is right after earnings. See how the stock acted after earnings, and then look for a place to get in. Like right here, you could, it kind of acted down, but it found support, okay, and it ran up, made a lower low, but it looks still okay here. And then you had a really strong reaction to earnings here, so it could have gone here and waited for a pullback, and then been in the stock at, what is that, $53. And then in that case, you could hold over earnings. You could hold over this earnings, and this earnings. But you don't want to get in to a stock, a week before earnings and then have it gap down on you. That's very difficult to swallow when you're putting your own money at risk. All right, JetBlue also looks pretty good. It hasn't broken out yet like Alaska Air, but it looks really strong off of this challenge of the 200-day moving average here, or excuse me, the 89-day moving average, and it looks pretty strong. So that's one to keep in mind if the market does break out and start going higher. Some of the refiners are looking pretty strong. If you look at Tesoro, Tesoro broke out. We can draw a line here, show it on the chart. You can see Tesoro has broken out here. There's a couple different ways to handle these breakouts. You can let it slow down and wait for a pullback, because a lot of times it'll retest this line. The market will move out and retest the breakout point. So you could put in an order right here at the breakout point, or maybe 10 cents above the breakout point. But again, it's got earnings coming up. Earnings are on the 28th of this month, at the end of the month. So, in fact, this is earnings season. So you're going to see a lot of earnings next week. So just get ready for it. Regeneron Pharmaceuticals. This has been another strong stock. Instead of basically the biotechs have been strong almost across the board, but Regeneron has been a strong one. Other strong stocks that are holding up their part. Disney. You see Disney's been strong here for a while. Nike had really good earnings a little while back and gapped up. You can see that right here. Here's the earnings they had on June 25th. The market gapped up. See it pulled back. So let's look at this. This is a great example. Here's a breakout right here, right? So you got a breakout right here. It was on earnings, so it broke out. But look where it pulled back to, right to the line again. This is very, very common. Happens all the time in the market. If you study these breakouts, you'll see this better than 60-70% of the time. It's very common. Ulta has been strong. Ulta, that's a place for the women to go. They sell cosmetics. You can see they've got a little breakout right here. Had a breakout on earnings a while back. Kind of traded sideways. Another breakout on earnings, but pulled back. It looks, this is a good solid base. So what happens if you're trading individual stocks? Anytime you have a good solid, it's just like that Japanese chart that we've been looking at. Anytime you have a good solid base like this, that's called support. And anytime you break out of a support area like this, it's a pretty good return on risk if you buy this, because it's not likely to move down and below this area, because there's so much. There's a huge amount of trading going on in this zone that I have rectangled off here. So once it breaks up above that, this area now is pretty darn good support. So, and these are just technical analysis tenets. There's real buying and selling going on behind these bars, but the bars and how they move on the chart and how they coalesce together and create these zones, these are very important tenets of technical analysis. and really tell you all you need to know about these stocks. Starbucks has been pretty strong. Guess people are still buying $5 and $10 coffees. Walgreens had pretty good earnings the other day. If you wanted to look at something like Walgreens, it did break out, but not. This is not a failed breakout, but it's not a complete breakout either. So you might wait and see if Walgreens pulls a little higher first, and then a lot of times it'll pull back to the line. So you might see something like this, and then have it pull back like so, and then back to the upside. So, but anyway, I'm just telling you this chart looks pretty good. What else was there? Facebook. Did we pull up Facebook yet? Facebook looks pretty decent. It's got earnings coming up on July 29th. But you can see we had a pretty standard looking pullback and then a reversal. And it's above this consolidation area that I had drawn here a while back. So it just... Now, look, this is another interesting deal. I don't know how long ago I drew this, but I drew this a while back, and look what happened. It broke out of it, and look where it pulled back to. Right there. Isn't that interesting? So, in fact, let me see if I can tell. Yeah, I drew this line apparently back here on the 29th of June. And the reason I know that is because when you pull the line, this last square stops wherever you let go of the line. So it looks like on June, whatever this is, looks like June 29th. Looks like I put these lines in. So anyway, I think that's interesting. And this is what I mean by technical analysis. It's very, very common for the market to pull back to this area, which also coincides with these highs right here. If I zoom in a little, and I put a box around these highs, something like this, isn't it interesting how it pulled back right into that area? So these are the types of things you want to look for if you're trading stocks, or you're looking for, I don't know why that's doing that, looking for some individual stocks to own to get a little bit more return out of your portfolio. That's about it for the week, folks. We've been talking now for about 30 minutes, and let me finish up just real quick with the S&P 500 and review that again. That's the VIX. Again, because of the internals in the market, I no longer think we're going to see a high. Okay. Now, that doesn't mean we couldn't see a high. Okay, I just want to be clear about that. The market could say, hey, we don't care what Seth thinks. We're going to go higher. And that's fine. But I'm just telling you there's a lot of charts that look pretty ugly, and I forgot to look at the financials. We'll do that real quick. But what I'm looking to happen is I'm looking for this to kind of move up into this area right around here, around 2100, 2110, something like that, and then roll over and go lower. So let me just look at the financials real quick. We'll look at the XLF. The XLF is an ETF, exchange traded fund. So if you wanted to own the financials and you wanted to diversify, you didn't want to pick Citibank or Goldman Sachs or JP Morgan, you could just buy the XLF. You can see it here, XLF. And this is the Sector Spider Financials. And you can see they got whacked pretty good, but you can see also that it looks like financials, at least initially, want to move into this area, right around here. Probably find a little support there, or a little resistance there, pull back, and maybe go higher, maybe not. There's no gap here to fill. And certainly if it got back up here, it would fill the gap. But I think you're going to at least see financials move into this area here. Of course, that's not very much further. And then I would be expecting financials to roll over there. We can look at some individual ones like Citibank. And these are pretty good moves. This is a pretty good move right here on Citibank. It fell by, from high to low, 8.5%. That's a pretty good move, pretty good pullback. So I think you look for Citibank to move into this area right around in here, maybe above that slightly, and then look for it to roll over. JP Morgan probably looks a lot like Citibank. You could go in here and you could look at, yeah, it looks a lot like Citibank. You could look at Wells Fargo. What is that? Is that WF? No. I forgot what Wells Fargo is. Well, we could look at JP Morgan. It looks very much like Citibank. And that's what you'll find is these big ones, they kind of move together and in the same pattern. So anyway, that's about it, everybody. Continue to watch the videos on YouTube. Share it with somebody. You can copy the link. I'm sure most of you know how to do that. I'm sure you've forwarded YouTube videos before. But you can just copy the link up here in your browser bar and just cut and paste it, or copy and paste it, and send it to your friends. Here it is right here. So just copy. Then I go to an email and paste it. There's not a lot of you guys viewing these out here yet, but I suspect when the market starts to roll over and there's more talk going on around the water cooler at work and things like that, I think there'll be opportunities for you to tell people about what we're doing here weekly. And hopefully, we'll pick up some more viewers, and not as many people will get hurt this time around in the marketplace. So that's about it. You can also follow me on Twitter at the little @ investor class, and then the YouTube channel under Middle Class Investor. You just go to the search bar up here, type in Middle Class Investor, and you will should get to my latest video, even though it might not be the actual top one. So anyway, that's it for this week, everybody. I want to thank you again for coming in and hope to see you next time. Take care. Bye-bye.